Here is a number that should make you angry. 92%. That is the percentage of professional fund managers, people with Ivy League degrees, Bloomberg terminals, and million-dollar salaries who failed to beat a simple index fund over the last 15 years. Think about that for a second. These are the people the financial industry tells you to trust with your money. They charge you fees, they send you glossy reports, they use words like strategic portfolio rebalancing and alpha generation. And yet, a fund that essentially runs itself with zero human stock picking quietly beat almost all of them. Warren Buffett, the greatest investor alive, has said this publicly and repeatedly. When he dies, he has instructed that 90% of his wife's inheritance be put into a single index fund, not managed by a hotshot Wall Street firm, a simple index fund. So if the world's greatest investor trusts index funds, why are most people still sitting on the sidelines not buying them? Usually, it's one of three things. They think it's complicated, they think they need a lot of money to start, or they simply don't know where to begin. Today, we fix all three of those problems in 6 minutes. What's up, everyone? I'm Alex, and this channel is where I break down money, personal finance, and investing in a way that actually makes sense for real people. No jargon, no fluff, no trying to sell you anything. Just practical knowledge that puts more money in your pocket, not Wall Street's. And today, we're doing a complete step-by-step tutorial on how to buy Fidelity index funds in 2026. I'm going to walk you through exactly how to open your account, which funds to actually choose, how to place your very first order, and, most importantly, which mistakes to avoid that most beginners make without realizing it. Whether you have $50 to invest or $50,000, this tutorial works for you. Because one of the things I love most about Fidelity specifically is that several of their best index funds have a $0 minimum. That means you can start today with whatever you have. All right, let's get into it. Before we touch Fidelity's website, let me make sure we're on the same page about what an index fund actually is, because once you understand this, everything else makes sense instantly. Imagine the S&P 500, the 500 biggest companies in America: Apple, Microsoft, Amazon, Google, Johnson & Johnson, all 500 of them. Now, imagine instead of trying to pick which one of those companies is going to perform best, which, by the way, even the professionals get wrong 92% of the time, you just bought a tiny piece of all 500 of them at once. That's an index fund. When Amazon goes up, you win. When Apple goes up, you win. When the American economy grows, which over any 20-year period in history it always has, you win. Here's a real example to make this concrete. If you had invested just $10,000 into an S&P 500 index fund in 2004 and done absolutely nothing, no checking, no trading, no stress, that money would be worth approximately $80,000 today. You did nothing. The market did the work. That is the power of index fund investing, and Fidelity is one of the best places on earth to do it. Now, you might be wondering, why Fidelity specifically? What about Vanguard? What about Schwab? All legitimate questions. Here's why I recommend Fidelity, especially for beginners in 2026. First, zero expense ratio funds. Fidelity offers index funds with literally zero management fees. Zero. That means more of your money stays invested and compounds over time. Vanguard charges a small fee. Fidelity charges nothing. On a $100,000 portfolio over 30 years, that difference adds up to thousands of dollars. Second, zero minimum investment. You don't need $1,000 or $3,000 to get started like some other platforms require. You can start with $1 if that's what you have. Third, fractional shares. You can buy a fraction of a share, meaning even expensive stocks are accessible regardless of your budget. Fourth, the platform is excellent. Clean, reliable, well-designed, and their customer service is genuinely good, which matters when you're just starting out. Bottom line, Fidelity removed every excuse not to start. So let's start. Step 1. Open your Fidelity account today. Go to fidelity.com and click Open an Account in the top right corner. You'll be asked what type of account you want to open. Here's how to choose. If this money is for retirement, choose a Roth IRA if you're under a certain income limit, or a traditional IRA if you want the tax deduction now. I'll do a separate deep dive video on which one is right for you. Drop a comment if you want that. If this money is you might need before retirement, choose a regular brokerage account. No restrictions on withdrawals, full flexibility. If you're investing for a child's education, look at a 529 account. For most people watching this, start with a Roth IRA if you qualify. You invest after-tax dollars, your money grows completely tax-free, and you pay zero tax when you withdraw in retirement. It is one of the most powerful wealth-building tools available to regular people, and most people are not using it. Fill in your personal details: name, address, social security number, employment information. This takes about 10 minutes. Fidelity will verify your identity, and your account is typically active within 1 business day. Step 2. Fund your account. Once your account is open, you need to add money to it. Click Transfer and then Deposit Money. Link your bank account by entering your bank's routing number and account number. You'll find these on the bottom of a check or in your banking app. Choose your amount. Remember, there is no minimum at Fidelity. $50 is fine, $500 is fine. Whatever you can commit to consistently is the right amount. Pro tip: set up automatic monthly contributions right now. Even $100 a month invested consistently from age 25 to 65 grows to over $500,000, assuming historical market returns. Automation removes the decision removes the excuses. Step 4. Place your order. Once your cash appears in your account, usually takes 1 to 3 business days from your bank, go to the Trade section at the top of the page. Click Mutual Funds because Fidelity's best index funds are structured as mutual funds, not ETFs. Don't worry about the difference right now. I'll explain in Step 5. In the search bar, type the fund ticker symbol. I'll give you the exact 3 funds to consider in just a moment, so stay with me. Step 5. Set up automatic investing. This is the step most tutorials skip, and it is arguably the most important one. Go to Accounts, then Statements and Settings, then find the Automatic Investments option. Set a fixed amount to automatically invest on a fixed date every month, the 1st of the month, the 15th, whatever aligns with your paycheck. This strategy is called dollar cost averaging, and here is why it's powerful with a real example. In March 2020, the market crashed 34% in 30 days because of COVID. Everyone who was watching the market panicked and stopped investing. But if you had automatic investments running, you were buying at the lowest prices of the decade without even thinking about it. Those investors who stayed the course saw their portfolios more than double in the following 2 years. The market will drop again. It always does. And when it does, automatic investing means you're buying on sale every time without needing the courage or the discipline to do it manually. Set it, forget it, get rich slowly. That's the whole strategy. All right, here are the 3 Fidelity index funds I want you to know about. These are not recommendations, I'm not your financial advisor, but these are the funds I personally think are worth researching for your own situation. Fund 1, FZROX, Fidelity Zero Total Market Index Fund. This fund owns a piece of every publicly traded company in the United States. Large companies, medium companies, small companies, all of them. Approximately 2,500 companies in one fund. Expense ratio, 0.00%. Zero, nothing, free. Minimum investment, $0. This is as simple as investing gets. You are betting on the entire American economy. Over any 20-year period in history, that bet has paid off. Fund 2, FZILX, Fidelity Zero International Index Fund. This fund owns companies outside the United States, Europe, Asia, emerging markets. It gives your portfolio global diversification. Expense ratio, 0.00%. Also free. Why does this matter? Because the U.S. won't always be the world's top-performing market. In the 2000s, international stocks significantly outperformed U.S. stocks. Holding both is simple, smart insurance. Fund 3, FXNAX, Fidelity U.S. Bond Index Fund. This fund owns U.S. government and corporate bonds. Bonds are more stable than stocks. They don't grow as fast, but they don't fall as hard either. Expense ratio, 0.025%. Nearly free. If you are closer to retirement, or if market volatility keeps you up at night, adding some bond exposure reduces your risk without sacrificing your entire growth potential. A simple starting portfolio for most people: 70% FZROX, U.S. total market, 20% FZILX, international diversification, 10% FXNAX, stability and bonds. Simple, diversified, nearly free to run, and historically devastatingly effective. Here is the thing I want you to sit with before you close this video. The best time to start investing was 10 years ago. The second best time is today.
Was 10 years ago. The second best time is today. Not next month when you feel more ready, not next year when you have more money. Today, with whatever you have. Because the single most powerful force in investing is not stock-picking genius or market timing. It's time. Every year you wait is a year of compounding you never get back. If you're 25 years old and you invest $200 a month starting today, you'll retire with approximately $800,000, assuming historical average returns. If you wait until you're 35 to start that same $200 a month, you retire with $350,000. Same money, same discipline, 10 years difference. $450,000 difference. That gap is not about intelligence. It is not about income. It is entirely about when you started. So, here's your homework before this video ends. Step 1. Go to Fidelity.com and open your account today. It takes 10 minutes. Step 2. Fund it with whatever you can, even $50. Step 3. Buy FZROX. One fund. That's it to begin. Step 4. Set up automatic monthly contributions and stop watching the market every day. That's the whole system, and it works. If this video helped you, hit subscribe because every week I post videos that help you understand money better, build wealth faster, and stop leaving it on the table. Drop a comment below. Tell me where you are in your investing journey. Just starting? Already investing? I read every single one. And share this with one person in your life who needs to hear it, because financial literacy is one of the greatest gifts you can give someone. I'm Alex. Go open that account. I'll see you in the next one.